Welcome to Subramani. Money managers in the US, let's call them the street, the Wall Street people are trying to tell you big lies, and typically they are saying that you can all earn high return with low risk with non-traded alternatives like private equity, venture capital and private real estate. Of course, they must be including private debt also, and this is a huge lie. The same people who told you that you should look for low cost, everybody should be in an index fund and as close to zero as possible, are now advocating funds which have a 2% fees and a 20% success rate fees as products in your 401k. Believe me, they will now come and say, oh, these costs don't really matter because the fund is really well managed, then all these costs don't matter. Now, why would it matter in a mutual fund? Why can't I put money in a well managed mutual fund and pay higher charges? Why should I choose an index fund? Oh, no, the fund manager will not beat the index. So will these guys who are putting money in private equity, private debt, venture capital and all these kind of assets, will they be able to handle your money better? I think no. And who better than Jason Zweig to turn to? He's given two examples which I'll have to read out. So one is Blue Rock Total Income Real Estate Fund, which is a portfolio of $3.7 billion in net assets that doesn't trade publicly. In earlier September, doesn't matter what time duration, its shareholders will vote on the fund's proposal to list its shares on the New York Stock Exchange. Another non-listed portfolio, Priority Income Fund, with assets of 980 million, is also seeking to go public in the coming months. Blue Rock is an interval fund, and this is a structure that generally allows you to enter and exit at particular times, and then it is at a price which they announce. So if the NAV is down, they can announce a buyback at a 7% gap. So if you want to come in, you come in at 100, you want to get out, you get out at 93, depending on the NAV, right? So this is what you can do in the US. So to think that only they could sell only limited amounts, and they could also redeem limited amounts. It's a tender offer fund which may not redeem more than 2.5% per quarter. So you will not be prioritized, right? So if everybody wants to get out of that fund, it is not going to ever happen. So in some ways, this is to encourage investors to stay invested. So your 401k plan is perfect for that. So people will stay in for a longer period of time. But in principle, the managers of interval funds can buy completely illiquid assets without being forced to sell in a downturn when investors want their money back. So this is dangerous because they could keep doing they may not even be doing mark to market for such funds. So there may not be possible to do a mark to market on a weekly basis, monthly basis, forget doing on a daily basis, because private assets don't trade, and it is the fund managers who tell you how much it is valued. Now this is so ridiculous. One big bank in India had an art fund. Those who are old enough will know this. Now in an art fund, the fund manager and the sales manager are the same, because he will only have to talk about the fund. So he goes and buys a painting worth 2 crores, and after some time he says, sir, your value has gone up because that painting is now worth 4 crores. There is no way how sorry, you can know. There is no independent valuation done by anybody. How will you ever come to NAV? How will in art kind of things? Similarly in private equity, he can keep on telling you, no, this is the next Google, this is the next Alphabet, whatever, but you don't even know how the valuation is done. That's really ridiculous, because when you want the money, it may not be available, or it may be available at a very diminished rate. And if they are allowed to redeem 2.5% every quarter or 2.5% every year, the money you're going to get after a very long period of time, and it need not, if it is on first come first serve basis, they might redeem their own friends and relatives. How will you know all this? Now if all this goes into your 401k plan, then go and go back 10 years, 20 years and check what they told you what a 401k plan should be. They said it should only be in index funds, it should be low cost and all those things. The same things will be turned on its head, and you will be told that why putting money in these funds is very good. So the Blue Rock Fund, launched in 2012 to invest in private real estate and borrowed money, had years of excellent performance. Then it got hammered after the Federal Reserve raised interest rates in in 2022. So the fund, which is total income plus real estate fund, has not given very great returns in post 2022, and even private income fund, which invests in private corporate loans, pays out a high yield at more than 17%. In its total return, which includes the income and any other changes in value, is a different story. The fund lost 19% in 2025 and 25% in the 12 months ended for May 31st May. As on 31st May, a direct listing is the right step needed to help set up a solid foundation, but the original unit holders are getting a ridiculously lower value, right? So first of all, owing to an alternative fund is a lot simpler than selling it, right? So you can own it, you can feel proud, you can stand in parties and say, oh, I also have that fund, but it is not exactly like holding an index fund. There's no liquidity in private equity, right? There's no liquidity in private debt. There, even if other investors might disagree with some valuation, the manager has to stand behind them. That works till the number of people willing to sell does not increase too much. If all your investors want an exit, you are in trouble. To answer to these funds and for alternative assets industry is to move assets into public markets. Move as much as of your assets into public markets. Let people evaluate it. So putting money in private equity makes no sense for most people. Putting that money in a 401k plan looks absolutely ridiculous, expensive. It is going to be hurtful. I do not know. I hope and pray that the Fed and SEC make sure that the conditions are so tough that not much goes into your into private equity. If it does, then your 401k has got one more reason to worry about. Thank you.